benefits paid by the Government Employees Pension Fund are guaranteed by government, and it cannot be reduced under the current regulatory environment. While this protects members, poor investment performance by the fund would mean that government must take money from other vital areas of spending to make up for any shortfall in the GEPF. So it's really important that the GEPF is well managed. The good news is that since 2004, the GEPF has been fully funded and financially sound. In the last valuation, the GEPF had a 108% funding level, or R1.08 of value for every R1 of member benefits. This has allowed the GEPF to maintain pension increases equal to 100% of inflation. So who actually manages members' money? The GEPF is managed by a board of trustees who, in consultation with the finance minister, determines the investment policy of the fund. An investment mandate has been signed with the Public Investment Corporation, which is a state-owned asset manager responsible for investing assets on behalf of the GEPF. The mandate specifies the asset classes that the PIC may invest in. The fund's investment strategy must include taking some market risk to get the returns required to fund members' retirement. Diversification plays an important role in lowering risk. This means that the fund invests across various asset classes, including equities or shares, bonds, property and cash, both locally and offshore. To keep down the running costs of the fund, the PIC invests around 75 to 80% of the fund in passive funds, which tracks the average return of the markets. The remainder is allocated to active fund managers to provide enhanced returns. The PIC also takes direct stakes in non-listed assets, including property. One of the challenges for the GEPF is its sheer size. It is the largest fund in the country, with over R2 trillion under management, and it accounts for 17% of the Johannesburg Stock Exchange. So any significant changes in investment strategy would have a direct impact on the JSE and therefore other investors. For example, the GEPF is considering increasing its offshore exposure, which is currently limited to 10%. This is divided between offshore and the rest of the African continent. However, consideration must be given to the potential negative impact on local markets. So this would need to be carefully managed whilst providing the GEPF with a more diversified portfolio in line with global best practice. As the largest fund in the country, the GEPF must also take into consideration the social impact of its investments. In 2010, the GEPF launched the Developmental Investment Policy, which includes investments in economic infrastructure, social infrastructure, environmental investments, as well as Black economic empowerment and job creation. However, these investments must still deliver market-related returns. The fund also supports Black economic empowerment fund managers and the development of an incubation fund for new Black fund managers. If you want to learn more about GEPF investments, you can obtain the latest annual report available on the GEPF website at gepf.co.za.